Are you fed up with working hard day in and day out, only to see your bank account stay stagnant or even decrease? It's time to take control of your financial future and start building real, lasting wealth. And the good news is, it's not as hard as you might think. In this video, we'll be discussing 5 simple steps that you can take to get rich off of dividends. Dividend investing is a tried and tested method for building wealth over a long term, and it's something that anyone can do with a little bit of knowledge and effort. So if you're ready to break free from the cycle of just getting by and start building real financial stability and independence, then keep watching. Welcome to 9 to 5 Finance, where we discuss smart finance and investing. Let's get started. The first step is to start by saving and investing as early as possible. The earlier you start, the more time you will have for your money to grow. One way to start saving and investing early is to open a retirement account, such as a 401k, or an individual retirement account, or IRA. These accounts allow you to keep money for your future, and many of them offer tax advantages as well. Another way to start saving and investing early is to set up a regular investment plan, such as a systematic investment plan or a dollar cost averaging plan. With these types of plans, you can invest a small amount of money on a regular basis, such as every month or every quarter. This can be a great way to build your investment portfolio over time and take advantage of the power of compound interest. Once you've started, you can focus on finding investments that pay dividends. Dividends are payments made by companies to their shareholders, and they can be a great way to generate passive income. By investing in companies that have a history of paying dividends, you can potentially earn money on your investments without having to sell any of your shares. So, this is the first step to get rich off dividends. Number 2. Next, do your research and choose high-quality dividend-paying stocks. Not all stocks are created equal, and it's important to do your due diligence when selecting stocks to invest in. One key factor to consider is the quality of the company. Look for companies with strong financials, a history of steady profits, and a track record for increasing their dividends over time. These types of companies are more likely to continue paying dividends in the future, which can provide a reliable source of income for you as an investor. Another factor to consider is the dividend yield, which is the amount of the dividend payment relative to the stock price. A high dividend yield can be tempting, but it's important to also consider the sustainability of the dividend. Some companies might have a high dividend yield because their stock price has fallen significantly, which could be a red flag. Number 3. The third step you need to do is to understand and manage risk. Investing in stocks, including dividend-paying stocks, carries some level of risk. It is important to understand and manage this risk in order to protect your investments and maximize your chances of success. One way to manage risk is to diversify your portfolio. By investing in a mix of stocks from different sectors and industries, you can spread out your risk and potentially reduce the impact of any one investment. Another way to manage risk is to pay attention to the macroeconomic environment. Economic conditions such as interest rates and inflation can impact the performance of stocks and your dividends. By staying informed about economic trends and developments, you can potentially make more informed investment decisions. Number 4. It is important to have a long-term perspective when investing in stocks. While the stock market can be volatile in the short term, it has historically trended upwards over the long term. By staying invested for the long haul, you can potentially ride out any short-term market fluctuations and increase your chances of earning dividends and building wealth. Now, you have some dividends. You should consider reinvesting them. Once you start earning dividends from your investments, you will have a choice to make. One option is to receive the dividends in cash and use them for your immediate needs or wants. This can be a great way to generate some extra income and give yourself a financial cushion. However, if your goal is to build wealth and get rich off of dividends, it can be more beneficial to reinvest your dividend back into your investments. This is known as compound interest, and it can help to accelerate the growth of your investments. When you reinvest your dividends, you are essentially using your dividend payments to buy more shares of stock. Over time, these additional shares can also generate dividends, which can then be reinvested again. This cycle can continue, resulting in exponential growth of your investments. Lastly, number 5. The final step is to stay on the course and review your investments regularly. Building in wealth through dividends is a long-term process, and it's important to stay committed to your investment plan. This means not getting swayed by short-term market fluctuations and maintaining a long-term perspective. It is also important to review your investments regularly, at least once a year, to ensure that they are still aligned with your financial goals and risk tolerance. This is a good time to reassess the quality of your investments, the diversification of your portfolio, and the performance of your dividends. If necessary, make adjustments to your investment portfolio to ensure that it continues to meet your needs. This might include selling off underperforming stocks or adding new investments to your portfolio. Here are 5 high-paying dividend stocks that you can consider for a long-term investment. Johnson & Johnson is a healthcare company that has a long history of paying dividends, with more than 50 consecutive years of dividend increases. The company has a strong track record of steady profits and a diversified portfolio of products, making it a reliable option for long-term investors. Procter & Gamble is a consumer goods company that has paid dividends for more than 120 years. The company has a strong brand portfolio and a history of steady profits, making it a solid choice for long-term dividend investors. PepsiCo is a multinational food and beverage company that has paid dividends for over 50 years. The company has a diversified portfolio of products and a track record of steady profits, making it also a reliable option for long-term investors. IBM is a technology company that has paid dividends for more than 100 years. The company has a strong balance sheet and a diversified portfolio of products and services, making it a solid choice for long-term dividend investors. AT&T is a telecommunications company that has paid dividends for more than 30 years. The company has a strong record of steady profits and a diversified portfolio of products and services, also making it a reliable option for long-term dividend investors. We would advise you to do your own research before considering investing in any stock. Building wealth through dividends can be a powerful way to generate passive income and achieve financial goals. We hope that you found our video on 5 simple steps to get rich off dividends helpful and informative. Following these simple steps and investing in high-quality, dividend-paying stocks, you can set yourself up for success. Remember, building wealth takes time and discipline, but with a solid plan and a long-term perspective, you can potentially get rich off dividends and secure your financial future. If you found this video valuable, please give us a like and consider sharing it with your friends and family. We publish new content regularly, and we would love to have you as part of our community. Thanks for watching. We hope to see you in the next video.